Good morning, everyone, and welcome. I think it's most morning for most of you. We're here on Central Time at 11 o'clock in the morning. Thank you for joining us today for our workshop, Future Pathways, Nonprofit Checkup, 7 Things to Know in 2026 with Elaine Grogan Luttrull. Did I pronounce your name correctly?
Yeah,
Middle
that
name?
was perfect, Kathy.
Thank you.
Thanks.
Awesome. Hi, everyone. My name is Kathy Liao, pronoun she, her. I am a East Asian woman in her 40s with a short shoulder length hair, wearing an orange jacket and a green shirt underneath there with kind of a virtual green background in the back there. I am the Organizational Services Program Officer here at Mid-America Arts Alliance, and welcome. It's so good to have you here today. Thank you all for setting aside your morning or midday, afternoon here with us and choosing to share the space with us here today. We here at Mid-America Arts Alliance believe in strengthening and supporting artists and cultural organizations. We also support communities throughout the region and beyond. We are a regional arts organization representing Arkansas, Kansas, Missouri, Nebraska, Oklahoma, and Texas, and our program reach beyond our 6-state region as well. I am representing organizational services here at Mid-America, and through our programming, we offer a combination of workshop, coach consultations, and peer-to-peer learning opportunities to work with arts leaders to govern more effectively, to be more fiscally astute, and develop strategies to address community needs. The Future Pathway series that you're here joining us today for, it came out of the needs that we hear from arts ecosystem conversations across our region. And so each of the topics come from what we heard directly from you all. And we're excited to share this next hour and a half with you. At this time, I am going to introduce our facilitator for today, Elaine.
As Kathy said, my name is Elaine. I use she, her pronouns, and I am joining you from Dublin, Ohio, just outside of Columbus, which is Kashkashkia and Hopewell Indigenous and Cultural Lands. So I'm technically outside of your region, but your region does include many of my favorite states, 2 of which I have lived in before. So it is really such a pleasure to be here. If you are listening instead of watching today, I am a 45-year-old white woman with wavy brownish hair that goes below my shoulders, and I'm wearing a green top today, sitting in front of a hexagonal background. I am professionally a CPA by training, and I hold something called a personal financial specialist designated, and I am an accredited financial counselor. So I like to think that all of my conversations have a little bit of human elements and some tax and accounting kind of elements and some sort of general finance strategy elements as well. All of my work is through a company called Minerva Financial Arts, where I work with artists and creative organizations across the country to support the business side of creativity. I do have the pleasure of working with a lot of regional and also state arts councils and commissions, with governmental groups, with lots of funding partners, and then, of course, with colleges and universities. I am a big believer in education. I think you cannot hear this information often enough, and it's really, really wonderful to be going over some of these things with you today. Last piece of housekeeping, even though I am a CPA, I am not giving you tax, legal, or accounting advice. All of this information is being provided in an educational context, but you probably knew that. So let's start with this 2026 checkup. Here's a quick snapshot of who's in the room today. As Kathy said, we have 40 or maybe just in excess of 40 attendees today, which is fantastic. And you all represent a lot of different budget sizes, right? So about 15% of the registrants have budgets that are more than $1 million. About, what is this, 30-ish% or so have budgets that are less than 75,000. And then everyone else sort of falls in the middle. So you are bringing different budget perspectives to this conversation. And you're also bringing different staff sizes to this conversation as well. We have organizations that are entirely volunteer run. We also have organizations with robust and capable staff and everything in between. And you're bringing different life cycle experiences. In some of the comments that were shared, some folks mentioned they are just starting their organization, which is fantastic. Some of you have a little bit more history under your belts, right? So we really do have a wide range of experience and sizes and knowledge in the room today. But no matter where you are, we have this one-page resource that will be dropped in the chat that I hope will be helpful for you. This is a resource I developed that basically has a series of aspirational statements. And my favorite way to use this is as a conversation starter, maybe with staff or volunteers or your board. And I love opening with this and inviting people to read the statements and then indicate how much they agree with each statement. Again, these statements are aspirational. So odds are not everybody agrees 100% with every statement, but based on what folks share, this can give you an idea of maybe where you might want to focus your efforts. My other favorite way of using this resource is to invite folks to identify the 3 statements that they think the organization does really well, and then talk about that. Or identify the 3 maybe areas for improvement, or the 3 statements the organization might want to focus on. That could be another good way of using this resource as a jumping off point to build capability, conversation, and maybe kind of focus your efforts for 2026. For today, we're going to be focusing on that middle column, right? There are sort of baseline things and more advanced things on either side of the resource, but our conversation is going to focus on that middle column. And the 7 things we're going to talk about are people, reporting and processes, artificial intelligence when it does and does not make sense in the finance function, dynamic budgeting, relevant policies you might want to have, funding diversification, and tax awareness. And folks shared when they registered what questions they might have or things they might want to talk about, which informed this list. And I will say most of the questions came up were about systems and reporting. And then a ton of questions around this idea of dynamic budgeting, specifically if funding is cut mid-year or adjusted, or if you're trying to build a budget with some assumptions about grants you may or may not receive. How can you possibly do that responsibly in a fiscally responsible way, right? So we have a lot of conversation around that dynamic budgeting piece. And then there were also quite a few questions about investment policies. What do you do with cash? Should you be investing cash? What does that look like, right? So all of those questions that you shared informed this conversation today. So with that, let's dive right into the first thing, which is all about people. So if you look at that aspirational statement on that resource, the people-related aspirational statement basically says we have the right money experts on staff, on board, and on call, and they talk to each other because money is everyone's job, right? So again, aspirational. But if we go a little bit deeper into aspects of this statement, we want to know who these folks are, right? So when we're thinking about the right money experts on staff, it's helpful if you have someone who is doing tracking of money coming in and money going out. It's helpful if someone is monitoring maybe key metrics that you might want to be paying attention to, or key balances you want to have in a reserve account or in a checking account. It's helpful to have someone who is doing reporting, whether that is grant reporting or monthly reporting to the board or even annual financial statement reporting. Helpful to have that as a task. We definitely want to have someone who's communicating financial information, not just living in a silo where they're managing debits and credits, but proactively communicating that information. And then someone who is strategizing about the money. Now, depending on how big your staff is, you might have 3 or 4 people doing these tasks, or you might be the one lone person who is doing all of these tasks, or you might have something in between. If you are looking to start building your finance team, often the bookkeeping role is the first one to hire for. That's sort of that tracking and monitoring piece. So that can be a good first hire if you're thinking strategically. But as you're thinking about who within the organization is doing the work, we want to make sure there is a person or people taking care of each of these tasks. And then on the board, of course, the board's role is one of oversight and governance. You also might have a working board where you have board members that are taking on some of these staff-like roles as well. That is perfectly fine. But you might also have a board who's more thinking about investing or compliance, certainly with tax filings or other sort of administrative things to make sure the organization complies with. And of course, we always want our board thinking about fundraising and strategy. As you're thinking about your board members and those individuals who are supporting the organization, either on a working level or on a more strategic level, having some sort of money person on your board is a really good idea. If you don't have one, I would make it a high priority to add one. And in my dream scenario, that would be a CPA who has experience in nonprofit accounting. That's not always who the money person is, but in my dream scenario, you would have someone who is a CPA with that nonprofit accounting experience because it is a little bit different than business accounting or individual accounting. But this third category of people is one that sometimes organizations miss. And I call this the sort of money experts you have on call. And what I mean by that is basically a more extended version of folks. So these people are probably not on your board or on your staff, but these are the people that if you have a question or if you're thinking about something or if you have a crazy idea and you want to know how crazy it is, these are the people who probably work in some sort of financial capacity that you would call. Maybe it's a CPA, maybe it's someone from your banking team, maybe it's someone from your auditing team, or if your organization doesn't have an audit, maybe you have perhaps a review or you have an accounting firm that does agreed upon procedures for you. So maybe someone from there is kind of your on-call money expert, or maybe it's somebody with investing advice or who's working in a finance function that is more investment related. It's important and interesting to have these folks kind of in your network. Number one, because they should be supporting your organization and affirming the creative work you are doing, right? They also could be great committee members, maybe not on the board, but for a special committee you might be thinking about, and they might eventually join the board. So think about having the right people doing the right tasks on your staff, on your board, and also on call, which gives you a little bit more flexibility to sort of expand that network a bit more. And then we want all of these different folks to be talking to each other, right? These can be formal or informal interactions, but we want them to know each other. We want them to use each other as sounding boards and as part of sort of the network and the community. And we want them to be sharing information with each other, especially clear and consistent financial information so that everybody is on the same page. In my dream scenario, and I'm going to use that phrase a lot today because again, these are aspirational things we're working toward. But in my dream scenario, every single person affiliated with the organization, whether it is staff or volunteer or board or stakeholder, would generally be able to say, this is what the organization does. This is generally about how much money it brings in each year. This is generally what it spends money on. And this is generally how we're feeling about the financial health of the organization long term, right? So being able to get that level of consistent awareness really only happens if there is that clear and consistent financial communication. So if any of this has resonated and you want to dive a little bit more into this particular thing of the 7, the potential action steps I would offer are to kind of review and update those job descriptions, or maybe even just rough outlines of what volunteers and stakeholders might be doing, just to make sure everything is being covered by someone. I would really encourage you to develop relationships with 3 additional external money people, right? And you can broadly define that, but that's sort of your on-call pool of experts, right? And there's some churn there. So maybe think about building 3 more of those relationships during this calendar year. And then maybe start thinking about those financial communication and insight standards. So, what information are we going to be proactively sharing and communicating across the organization or across the stakeholders when it comes to money or finance within the organization? And to be clear, we're not going to share the full chart of accounts and all the details, right? But what does it look like to really create that sort of baseline expectation that everybody has some awareness around money? So that's our first of 7 things. We're moving right through these. The second has to do with reporting and processes, right? So, our aspirational statement here is that the financial reporting for the organization minimizes inefficiencies, is well documented, particularly so that you can start outsourcing tasks or delegating some of those responsibilities. And the system is used to support that timely, clear, and consistent communication of that financial information. So that's our aspirational statement when it comes to systems and reporting. And if we are to dive in a little bit more, it basically means our systems are capturing the right information. If you are really just starting out and at a relatively modest budget level, your system might be Google Sheets, and that is totally and completely fine. But let's make sure it's set up really well to capture the right information. As the organization grows, we're probably thinking about an official bookkeeping type of system. So again, we want to make sure the information is capturing what you need it to capture, and we want your systems to be talking to each other. So, for example, if someone is going to purchase a ticket to an event you are hosting, right, or maybe sign up to attend a non-ticketed or free event, we want to make sure as we're recording that transaction in our financial system, the human information about the person is ending up in some sort of donor database. And then we're also thinking about what ongoing proactive communication with that person looks like, right? So the idea of letting your systems talk to each other so that we can make sure that we really are being efficient with what we're doing with our data is really important. That means basically minimizing the rework. If you have to take information from a ticketing platform and then upload it in a different format into your donor database and then somehow convert it into your communication newsletter database, that's a lot of rework, and that's not a great use of anyone's time. So being really smart about the systems so that they can be efficient and talk to each other is huge. The most common pain points I see when it comes to having to sort of rework comes up in a couple of different areas. I don't know if these will resonate with you, but they might feel familiar. The first is when we're asking anyone within the organization to look at the budget and compare it with actual results. Oftentimes, that's an area where it takes some sort of back and forth work or some formatting work. Your financial system might have a great way of doing that, but that can be a place where there's some rework that has to happen that can be kind of frustrating. I also see a lot of pain points when it comes to budgeting and forecasting versus the accounting system that tracks actual information. Some of this is just going to be part of the annoyances, right? Especially in a dynamic budgeting setting when you might be updating forecasts in real time in a Google Sheet without necessarily updating the formally approved budget, right? So some of that might just need to happen, but it's really nice if you can do that dynamic budgeting within your financial system. And we see a comment in the chat about the plugins for QuickBooks that allow you to do that, right? So definitely lean into those systems that will help you and make your life easier. Sometimes there's a learning curve, but I promise they will make your life easier. And thanks for affirming that in the chat. The other sort of pain point that comes up a lot is when it comes to reporting for grants or for donors. And sometimes that reporting looks different than the reports that are automatically generated from your financial system, right? So sometimes that can be a place where there is some rework as well. So Be aware of these potential pain points. If they are familiar to you, maybe that's an opportunity to sort of re-examine a system and figure out what a really excellent solution might be on an ongoing basis. The part about all of these jobs being well documented is really important as well. For whatever tasks you are doing, or your volunteers are doing, or your staff is doing, or even your board is doing, it's helpful if you have some sort of process booklet or process document or a job guide, just to sort of document the tasks that need to be done, ideally with pictures and screenshots instead of sort of narrative form, so that a job can then be handed off to someone else with that consistency. It's also really helpful to have up-to-date contact lists, right? If something goes wrong at the bank, or if someone needs to approve transactions that are being sort of affirmed on a daily basis, right? Who is that person? Who's that contact at the bank? If you're using positive pay, right, for your transactions through your financial institution, who's the contact person there? Often the main person within the organization knows who this is immediately, but we want to make sure that information doesn't live only in someone's brain. It's captured somewhere more broadly. And honestly, that person isn't probably on your donor database list, but maybe they are getting newsletter communications from the organization. So again, thinking about those processes and making sure we're avoiding rework and everybody's on the same page is a really good strategy. And then, of course, we want to make sure we're backing up all of our information, whether that's on a cloud or an external hard drive or something else. We also want to make sure we have appropriate logins and those are safe and secure, and we're following password policies and all of those other best practices when it comes to documenting, storing, and retaining all of our information, especially the financial information. And I know what you're saying. You are so busy running your organization and already wearing so many different hats that you do not have time to put together a process book for some task you can do with your eyes closed. I know how busy you all are. And I will still invite you to give yourself some time to do this. Not only because it is impossible to delegate a task if everything related to it only lives in your brain, but this is the only way we will free up time and energy to focus on the most important things, right? It is so important that you're giving yourself some of that strategic time to work on the business or the organization or the creativity instead of in the business. And I know we are doing too many things to do that, and still give yourself some time to be able to do that. And starting to outsource some of these tasks is a really good strategy. It's also a great anti-fraud measurement, right? If you have one person within the organization and they are the only person that is deeply involved with the money, right? That is a real big fraud risk or embezzlement risk. And we just want to be really smart about making sure everything is well documented to protect your organization and the work overall. The third piece about this reporting and processes sort of aspirational statement has to do with communicating relevant information. The financial information can be overwhelming. It's not always pretty to look at. And the person within your organization that loves money, right, might really like getting way more in the weeds than is useful for different stakeholder groups. So if you don't already have some sort of financial dashboard you are using within your organization, this could be a really good year to start thinking about what that looks like. And when I say dashboard, what I mean is a visual depiction of key financial information, right? You can see some that have like red, yellow, green indicator lights or something like that. For me, I would rather it be branded in your organization's colors, and I would rather it summarize visually 4 or 5 key things that board members and staff members and stakeholders of the organization need to be watching when it comes to finance, right? The contents might vary based on your organization, but there's probably something around budget to actual numbers. Here's what we're hoping to raise, and here's how much we have raised so far. And that's probably a visual representation so everyone can see how close you are getting to your fundraising goals. Or here's what we had planned to spend on this particular performance or production, and here's what we really spent. Again, visually capturing something related to the expense side. You also might have other key metrics you're paying attention to. Maybe it is a cash balance, or maybe it is sort of a runway for how long your operating reserves will last, right? Or maybe it's something related to programs, right? It's okay to include some sort of program metric within a financial dashboard, right? Number of new donors or number of brand new audience members that bought tickets. It's okay to include other key metrics here as well. If you're going much deeper into this, say at the board level, maybe there's something to do with a 5-year forecast visually presented here. That could be interesting. Maybe you're also capturing investment information. I don't know that I would put investment information out on your website, right? But maybe it's really important that a board dashboard includes something like that. And maybe for stakeholders, we're getting back to that sort of baseline information that we want folks to know. What's the fundraising mix? What does the organization generally raise and what does it generally spend, right? There can be a very high level version of this dashboard as well. These are a couple of examples of just very, very simple visual representations of different things. And the nice thing about this dashboard is once you've designed it, and I like it to be sort of a one-page PDF that can be emailed or printed out and shared at board meetings or shared at staff huddles if you do those sort of weekly or monthly, right? It can be consistent over time, so people start to get used to what the pictures look like, which means when a picture looks different, it's a lot easier for their eyes and brains to sort of notice that it looks different, right? And again, put these in your colors, make it pretty, use it to start that conversation. So if this is something that you are leaning into, I'd invite you to take some time this year to think about the system pain points that you might think about rectifying. Definitely be researching those potential solutions. Document those processes so you can get them out of your brain or someone else's brain. And then start thinking about the information you really do want to communicate on a regular basis. And then maybe think about what it looks like in dashboard format. Sarah's got a great question in the chat about sort of, is there a way to automate that? Yes, if anyone has a system they love, definitely drop that in the chat. There are a lot of different programs you can sort of purchase and pay for. I will say though, one relatively easy, consistent way, especially if you have a financial system you love, and I think maybe you were the QuickBooks user. QuickBooks already has a really nice dashboard, so you might find yourself just on a weekly basis kind of exporting 3 key charts from QuickBooks and then putting them into a slide deck or a one-pager that then gets shared more broadly. There are plugins you can add to that. You can also design something in Canva or, in slides or PowerPoint if you're comfortable using that, and then sort of document the process of the 3 numbers that get updated. And that's a perfect use for a system and maybe even some AI options. And speaking of AI, I can't give a webinar in 2026 without at least mentioning artificial intelligence. And so the aspirational statement here is that you know when to use and when not to use AI as part of the finance function. And so I will share, and I think it's on the back page of the resource sheet, the AICPA, which is the American Institute of Certified Public Accountants, which I suspect is a group you don't belong to, which is totally fine, but hopefully your board member does. They have some amazing resources on best practices when it comes to AI and the types of AIs that folks can be thinking about. And so, what I'd love to summarize is just three that maybe could be helpful for you to think about. And the first is predictive AI. You might hear this called machine learning as well, but this is the type of AI that can start automatically categorizing your transactions. If you're using a financial system like a QuickBooks or Zero, or something like an online-based QuickBooks or financial system, it has elements of this in it, right? This is where the software notices that certain transactions always fall into an expense category, and it will take a guess at categorizing different transactions. This is a really, really wonderful use of AI because it can save you a lot of time. Instead of you manually categorizing things, AI, this predictive AI, will take a first pass at it. You obviously always have to check it because it's never 100% accurate, but checking it often takes far less time than doing it from scratch, right? So this is definitely a type of AI, that machine learning, that predictive AI, that can be very helpful in your finance function. The second type that could be interesting is similar to what we were describing with that dashboard. This is extraction AI. So, this is the type of artificial intelligence that will look at data. Often it's data that you feed to it, and then it will summarize that data, right? So sometimes we've seen this in accounting world. If you upload a bunch of invoices, and it'll then summarize the invoice information coming out of sort of that stack of paper, for example, right? It can be really interesting to do that maybe from your investment statements. If you're sort of wanting to get a summary of, lots of different investment positions, you can also use this to sort of feed a lot of data and then distill it into key points, right? But this extraction piece is basically the AI that is looking at something, you're directing it to look at, and then teasing out key pieces of information. This can be really helpful if you're drafting, important program service accomplishments, or reviewing press maybe that has been covered from the organization, or maybe you're going to feed in donor databases and other sort of ticket sale databases and sort of look for overlaps, right? So this extraction AI isn't one that I necessarily see a lot of small organizations using. I think our biggest organizations are already playing around with this. And in the middle, this might be something that's worth exploring for this year if it could save you some time and energy. I do want to note this type of AI, this extraction AI, is different from generative AI. And generative AI are those large language models. So something like ChatGPT, right? This is where the AI is basically predicting text to follow, or producing common answers to consistent questions, right? What I would caution you with generative AI is that it still does hallucinate, right? Which means generative AI sort of predicts things, but it might make it up from scratch. One of my favorite AI horror stories has to do with an attorney in the Northeast who used ChatGPT to write a brief and filed it with the court. And ChatGPT made up the name of a case. Why? Because if you're just predicting text, right, US versus somebody sounds like it could be a case, right? So this generative AI can still hallucinate. Don't do that, right? That is not a good look for that attorney or anyone else. So this is where, when you're thinking about generative AI, we want to be really careful to make sure we're reviewing and then double checking all of the information, especially when it comes to anything financial, right? But when we're thinking about that extraction piece, I think this just came up in the chat with this sort of AI assist extraction for summaries, right? That can be really, really helpful. So just make sure as you're starting to play with AI, you are clear with if it is extraction AI or generative AI or predictive, where you do have those guardrails, and then just make sure you know what it's doing and then what level of double check you need to put into this. When it comes to AI, definitely make sure you are thinking about working smarter, but not harder. And then also, don't think that AI is this magical solution that will solve all of your problems, right? Because it is a very useful tool, especially if you understand how it's being used. But you are still in charge and you are still the expert. So use it as a tool instead of as a replacement for the things you would rather not do. Make sure you're incorporating reasonable limits. If it makes sense for your organization to start drafting policies for engaging with AI, that could be something to start thinking about this year. And then anytime you're using AI, check, double check, and then maybe triple or quadruple check as well, just to make sure we're not doing anything crazy with our organizations. Okay, when it comes to dynamic budgeting, the aspirational statement here has to do with using scenario-based budgeting, active forecasting, and cash flow managing or cash flow modeling to manage your budget, right? So once upon a time in ancient history, when probably none of us were really around, because we're talking about more than 20 years ago, right? We were thinking about creating a budget, right? Monitoring progress, and then projecting year-end results. And that was kind of it. That is not how thriving organizations are budgeting anymore. We're often seeing organizations that have multiple budgets being created under different scenarios. We're using budgets to do what if analysis. So say, what if our fundraising comes in 30% below our goal? What would we do? Or what if we receive an unexpected $50,000 unrestricted gifts? What would we do, right? So we're using this sort of dynamic approach to create these different scenarios, sometimes as a jumping off point to land on an approved budget, and sometimes to help us plan for so much uncertainty that's happening. We're always still going to be monitoring progress and continually updating our forecasts, not necessarily just once or twice a year. That was sort of a more old school finance function where, maybe quarterly, maybe twice a year, you would update actual results and then reforecast, right? Now we're continually updating our forecasts and looking much more in real time at adjusting those in this dynamic budgeting world. And then we're projecting our future results on a rolling basis, not just an annual one. So when we're thinking about these sort of scenarios in budgeting, there are a couple of different ways to do this, but one common way is to basically start with a most likely version of the budget and then essentially stress test it with a very conservative version of the budget where funding is much lower than expected. And then maybe a much more aggressive version of the budget where funding is much more robust than you might be normally comfortable with so that you can still plan for what to do if that were to be the case, right? And I will say it's much easier to sort of streamline these different scenarios if you are clear on the budget drivers you're wanting to isolate. So what do I mean by that? Maybe you are an organization that has 80% of your funding that comes from individual donors and 20% comes from foundations. And maybe you say, you know what, we feel pretty good about our grants, right? We think that's consistent. We have great relationships with our funders, and we have a nice plan to continue to grow that. We feel good about that 20%. You might not need different scenarios when it comes to that 20%. But maybe for that 80%, you are really uncertain about how folks are feeling about their individual donations, right? So if you know a key driver of your budget is the number of individual donors and the average donation of each, that's where you can focus your effort in kind of identifying different scenarios that you might want to play with. This is a completely sanitized version of a dynamic budget, but these names are accurate because when we're putting together dynamic budgets or scenario-based budgeting, right? this is often what we're using as a starting point for conversation, right? So once upon a time, it was in 2023, we created these three different scenarios for an organization I was on the board of. And it will not surprise you to know that I was the treasurer. And so this is how we teed up the budget conversation. We named the budgets. There was the turtle, that's like the very slow, super conservative, we're not comfortable with this kind of budget. We had one that we named after the executive director because we all felt very good about her capabilities. And then we had one and we named it the Kardashian because that was just the dream big, money is no object. This is what we would sort of look at in a budget world. Now, it was still rooted in reality. It wasn't totally and completely outlandish, but that's how we sort of invited our non-financial board members to engage with this conversation in a way that they could very clearly understand, okay, what am I looking at? Why are there these different versions? We also then explained in sort of edited, simplified language at the top, generally what the differences between these three were. And then we didn't show the full and complete budget with tons of different line items. We kind of collapsed everything so it was a little bit simpler to look at, and that so we could identify where really the key changes were. Right. So that's how we started introducing this scenario-based budgeting in a way for the board to wrap its head around where they would ultimately land when it came to approving a budget for the year. And then also setting some policy around, okay, if we approve this middle budget, what are the key metrics we're going to watch to automatically revert to a more conservative budget if, for example, we get $0 in sponsorships instead of 275, right? So it sort of allowed some of that decision framework to take place in advance instead of in the heat of the moment. This is, again, a sanitized, simplified version of what that expense side looked at, but it also allowed folks to sort of focus in on the key decisions. And for this particular organization, it was basically how much of a raise are we going to give folks? Are we comfortable giving them a bigger raise than we might sort of conservatively be most comfortable with, right? So there was a lot of discussion around that. And then there was a new creative program that folks were excited about. And then there was a really important, but not that exciting, required administrative financial kind of thing that we probably needed to do. And so this setup allowed us to focus the conversation of the board sort of in really what are these priorities, right? So again, we've got our cute little names. We've got a quick description of what kind of the differences look like, right? And then we've got the numbers at the bottom. You will also see, I don't know if you're doing mental math quickly, but for these particular examples, all three of these presented loss budgets, right? That is not common, but 2023 was a rough year for this particular organization. And so a lot of the conversation was around how big of a loss are we comfortable with? Or said differently, how much of our reserves are we willing to commit to covering that loss if things don't go as planned, right? And if you're looking at it quickly, this Kardashian one had proposed a $150,000 loss for the year. Spoiler alert, we did not go with that one, right? We ended up at sort of a hybrid version, and presenting these different scenarios allowed folks to have really meaningful, intentional conversation around what that looked like. Because you do still have to approve a budget, right? You can't just scenario yourself to death. You do have to actually approve a budget for the year. But by having one with those clear drivers and with everybody on the same page, it also gave the board the right kind of direction to give to the executive director around, okay, once our sponsorships hit 30 to 40 to 50% of the goal, then we're comfortable moving into this sort of slightly more aggressive version of the budget or something like that, right? It also gives you an opportunity to identify where there's any sort of timing flexibility within the budget. When it came to this non-exciting administrative project, right, there was a lot of flexibility to do it at the beginning of the year or at the end of the year, right? We were sort of in conversation with the vendor and there was no clear time pressure. So that basically bought us a little bit of time to see how some of those revenue and fundraising conversations were going before we committed. And before we committed to the slightly scaled back, but still necessary version or the full version. Right. So your dynamic budgeting process in these scenarios will allow you to sort of do all of that and allow the board to give good feedback to the executive director. The other tool that, again, many organizations are doing now, and everyone probably should be doing, is this idea of a rolling forecast, right? So instead of updating a budget and a forecast once a year or maybe twice a year, every time you're updating your numbers, and it's probably monthly. If you're a small organization, it might be quarterly, but what you are probably doing is updating your numbers and then always rolling forward and forecasting forward 3 months, right? So if we're in December, I'm definitely going to be very clearly forecasting January, February, and March. And then I'm probably going to roughly forecast April, May, and June, but my solid forecast is for the next 3 months because I have a lot of clarity around that. And then once it's January, I'm going to solidly forecast February, March, and April, and then roughly forecast 3 months after that. And then always looking forward 3 to 6 months with ongoing numbers that are continually being updated, so that you can go back to some of that flexibility, you can see what things are going, and you can make sure that if the forecast starts to get a little hairy, like, okay, we're in March, and you know what? I do not have good numbers for July, August, and September. Fundraising is looking really rough. You can start having those conversations with the board sooner rather than later. It's also probably really important to be doing some serious cash flow modeling. And again, you might be already doing this. And when it comes to your financial system, whatever you're using, there's probably a cash flow modeling tool embedded in there. If you're using Google Sheets or Excel, you might be doing this slightly more manually. But this is definitely something, as you're thinking about the amount of cash that you're going to have on hand for your operating accounts or your reserves, you want to make sure you are forecasting this and then modeling what it's going to look like, knowing that the numbers aren't going to be perfect, but also knowing that you might have a couple of automated or trigger reporting points. The example here is if the ending cash balance is less than 90% of the target for the next 3 months, what is the action step? We know we're going to draw from reserves or schedule a draw from reserves or maybe tap a line of credit if we have one of those. And we're going to notify the board that this is sort of happening, right? So again, this is just a super, super simple calculation where you have your starting cash balance. We're projecting new money that's coming in cash, not sort of pledges or anything like that, but like actual money received. We're projecting actual money going out the door and then predicting an ending balance. And as you sort of look forward with this, right, then it starts to be kind of easy to see when you might have cash flow issues or might need to take some action proactively. So if dynamic budgeting is something you're thinking about, I would invite you to really think about budgeting and forecasting as this like superpower that you can incorporate into conversations about the organization. That might be a little ambitious, but it really is something powerful you can lean into. Definitely lean into those scenarios, whatever ones make sense for you and based on the key drivers that make the most sense for your organization. And then absolutely make sure you are regularly forecasting, not just on a sort of sporadic basis. When it comes to the policies your organization might want to have on hand, the aspirational statement is that you have your cash reserve and investment policy and you follow it, and it has been updated to reflect your current reality. If your organization has been around for a minute and you maybe adopted all these policies a few years ago, we're in strange and uncertain times. So you might want to dust off these policies and see if they need to be updated for your current reality, whether your budget has changed dramatically since they were adopted, or whether you might want to be maybe a little more cash heavy in this moment because of some of the uncertainty. Or maybe you're feeling fantastic about some prospects and you can back off a cash reserve policy a little bit, right? But maybe just dust it off and make sure it is where you want it to be. Your cash reserve policy, the purpose of this is to decide the amount of cash to have on hand, not only to cover any sort of cash shortages, right, but also to think about any sort of emergencies. When we're thinking about the target amount of cash to have on hand, really, I have seen everything from very, very little to probably too much. So it really does depend on the organization. If you're looking to the for-profit sector for sort of a benchmark, having enough cash to cover 3 months worth of expenses starts to feel pretty comfortable. 6 gives you a lot of breathing room, right? But somewhere in there might be a good starting point, although, of course, adapt for your own reality based on your organization. And also know that the target amount might vary throughout the year. If you are a performance-based organization that gets a ton of new season subscription revenue around this time of year, and you have some severe shortages in, say, August, that should be part of your cash reserve policy, right? Because maybe you are comfortable knowing the amount can dip lower during certain seasons simply because of the rhythm of your organization. That's okay. You also might decide that you're comfortable having a lower amount in cash reserves if you have a line of credit that you are very comfortable using or tapping with your favorite financial institution. Or maybe you're in a position where you have a really solid, robust emergency donor database that you can sort of go to. Maybe this person is on the board, or you have sort of an emergency source of quick money if you need it. Assuming the donor is on board with that, right? That maybe informs my take that your cash reserve policy could be a little bit lower. If neither of those things are true and you really don't like uncertainty, I'd probably nudge up that cash reserve amount. And of course, if you have any sort of fixed assets, if you own your building or you have high levels of equipment that you're needing to maintain, particularly if they are on the older side or aging, I might be nudging up that cash reserve policy as well. So the key question for this policy is how much should we keep in reserve? And your key question right now is to make sure that amount is still the right target based on everything we know to be true in 2026. If you want to go deeper on this policy, it's helpful to know where these cash reserves are going to be kept, right? Some sort of savings account could be great. The higher the yield, the better. Maybe you start thinking about investments for these. Maybe it's simply a money market investment fund, or maybe you keep 3 months worth of cash in high yield savings, and then you're slightly more aggressive, maybe like bonds or something like that. A bond fund is what I really mean for sort of the next 3 months of your cash reserves. That's all a conversation for your board. I would also say if you don't have sort of an acceptable use policy broadly defined about when it's okay to use the reserves, it's probably a good idea to define those things. And then also figure out who gets to decide if you can use the reserve. Is that a board vote, or does the executive director sort of have some discretion there? What does that communication look like? Is there a threshold where the board has to vote, right? That's all really important. And then lastly, let's pretend you are going to draw upon the reserves. Maybe you're going to use, $20,000 to cover an operating shortfall for some particular reason, or you're going to take $10,000 to do an emergency roof repair. What's the timeline for replacing that amount within the reserve account? Is it 1 year? Is it 3 years, right? That's something that should be kind of defined and that your organization should be thinking about so that it actually does happen over time. If you are an organization that is thinking beyond cash and maybe more into sort of investments, then there are some additional interesting conversations you're probably having, right? You probably have an investment policy, or if not, maybe you go ahead and draft one, right? And the purpose of this policy is to guide the investment decisions so that the organization can maximize the earnings on its money within some sort of prudent approach while still being fiscally and fiduciarily responsible, right? And this creates a lot of tension, right? Because making really safe choices feels really good. And you might have some board members or stakeholders or individuals that are much more comfortable with a lot of cash in a very safe place. That's totally fine. And for the long-term health of the organization, we want our income or our cash to be at least earning enough to keep up with inflation. And it's really a good idea if we can make sure we are making really intentional, smart choices to maximize our earnings without taking on unnecessary risk, right? Again, there's a lot of tension that can come up there depending on the history of the organization, the personalities involved, right? So all of this is to say, having the conversations and the policies can help resolve some of this and get everyone on the same page. We also want to make sure someone is monitoring the investments. Is that someone from the board? Is that an investment manager that you have outsourced investment decisions to? What sort of decision-making authority do they have, right? And also, what expertise do you already have or might you need, right? This can be a wonderful time to really bring on some additional expertise, either onto the board or maybe onto an investment committee of the board, and drawing on that expertise and leaning into ongoing monitoring without sort of panicking if there's major market events, right? That can be really, really helpful. This could also be a time within your investment policy to think about the mission and the values of your organization. I have seen and increasingly have seen, especially over the past decade or so, organizations writing into investment policies sort of that they intend to prioritize values-based investing, or they want to avoid investments in particular industries that work counter to their mission, right? Again, fodder for conversation and a potential source of tension, but that's something you can think about in an investment policy. Once we're thinking about investments, I'm a big fan of David Swenson's work when it comes to portfolio management for any investments, but also specifically endowments, right? So as you think about your overall investment, we want to think about sort of what's the target portfolio allocation? What percentage are we aiming for to have in maybe cash, in stocks, in bonds? What percentage are we aiming to have domestically invested? What percentage do we want to have invested abroad? If you are a larger organization, maybe you are also thinking beyond sort of, equity and bond index funds or portfolios. Maybe you're thinking about alternative investments, right? What does that look like as part of your overall portfolio allocation? So the sooner you can kind of define this in ranges, the easier it will be to check in with those ranges on a regular basis and see when and if it is time to rebalance. So maybe revisit this if you haven't looked at it in a while. Are those components within our policy still the right ones? Are we still comfortable with them given what's happening in the market? Depending on what you're invested in, you might think you're really well diversified, but it is very possible you've gotten more tech heavy than you anticipated, right? So, maybe check in and think about what that looks like, and then make sure the fees for your investments are reasonable. You're not paying too much in fees, because every dollar in fee is a dollar you're not reinvesting and continuing to earn on. And also, of course, make sure whoever is monitoring this investment is actually doing that, is checking in with folks, is kind of staying on top of it. And of course, beyond just an investment policy, if you have a specific endowment, board designated or otherwise, that you're thinking about, you probably also have rules around that endowment, including spending rules and other things. So the big takeaway when it comes to these policies in particular is let's polish up those policies, review them, dust them off, and make sure they are still serving you in 2026 in the way you want to be served. Our next potential topic has to do with diversifying your funding. And the aspirational statement says we work to diversify funding and revenue, emphasizing unrestricted funding as much as possible. I just pulled a report from Candid, which is a fantastic source for funding research and other research in the nonprofit sector. They do really, really excellent work. Used to be GuideStar in the Foundation Center, if you're familiar with it. And they shared very recently, it's linked here on the slides if you want to read the full article, the common revenue sources by nonprofit size. It will not surprise you that there is a range of nonprofit sources. What jumped out to me is the difference between large nonprofits and small nonprofits when it comes to grants and especially governmental funding. That is not shocking given everything that is going on, right? But that is a big gap. So if you are a small nonprofit looking to grow, those are two areas I might think about building some expertise in and laying some groundwork for. And I continue to believe there's interesting opportunities when it comes to earned income and also individual donors. When we're thinking about diversifying your funding, we are thinking about earned income versus contributed income, and also thinking about maybe some hybrid strategies. I will also remind you at this point that, not all of my ideas are good ones, and sometimes these hybrid fundraising strategies don't make sense for your organization. That is totally and completely fine, right? And if you can start thinking about bad ideas, you can invite the good ones to percolate up to the center, right? And noting in the chat, there are a number of grants that cannot extend to small organizations if their budget size isn't large enough. And our grants can be more heavily weighted toward the large organizations for sure. The creative hybrids, I just got a season renewal subscription in the mail, and I loved it because the performing arts company put the sort of normal standard renewal season amount for, the seats you had last year. And then they added a second line that said, hey, did you know it actually costs us substantially more than the ticket price to put on all of these shows? And of course I knew that, right? But lots of subscribers might not have. So they invited long-term subscribers to give at the fully sustaining level instead of the standard ticket price level, right? We're embedding these additional contributions into the earned income sort of ask, which is fantastic. I've also seen a lot of organizations do really interesting things when it comes to like buy one, give one kind of models, which again, I put in sort of this hybrid strategy between earned income and contributed income. As you're thinking about earned income opportunities as well, if that is something you're thinking about, it's interesting to me to identify things that your organization does. Maybe it's software, maybe it's a process, maybe it's something you can license, right? Maybe it is, merchandise or something like that. There could be opportunities to monetize some of the expertise you've developed. Maybe not, right? Maybe you're not willing to do that. That's totally fine, but just be open to the idea of looking for those earned income opportunities, including with any assets you have, particularly if you have space or have any sort of equipment that can be rented out, licensed, something like that. And also noting, if you are a group that is leaning into earned income, just watch for any unrelated business taxable income implications. That usually means an extra tax return and you pay tax on unrelated business income. I don't hate that if you're earning enough to justify it. But when we're thinking about further diversifying our revenue beyond just sort of the type of revenue, we're also wanting to make sure we're collecting income from multiple different sources. And there's not sort of perfect math around what your pie chart of sources of funding should look like, but you should probably have a pie chart for your sources of funding. And if one of the slices starts to get bigger, maybe we do some what if analysis with the budget to see what would happen if something goes wrong there. Or maybe we think about intentionally growing some of those other slices so we're not overly reliant on one source. We also want to make sure you're leveraging your partnerships and really thinking about multi-year opportunities when it comes to diversifying your funding. I have noted on here as well, thinking about legacy giving. We know there is a ridiculous amount of money that is part of what economists have been calling this great wealth transfer. These are from our silent generation and our boomers who are transferring wealth to their heirs. So it's interesting to sort of be aware of what's happening anthropologically in the country and just sort of identify any potential opportunities there that might make sense for you. And of course, I do not need to tell you that we love unrestricted giving, right? The less restrictions we can have, the better. So thinking about unrestricted dollars for capacity building, certainly there are grants that can support that. But also just thinking about our individual donors that might find it compelling to provide some unrestricted operational support. These tend to be our less sort of artistically motivated individual donors and our more maybe economically, businessly, financially motivated donors who might really respond well to, the idea of contributing, ideas and insights and expertise and money to working again on the business or that operational side instead of working in the business. And then, of course, organizations, particularly smaller ones, have had some interesting luck sort of expanding those sort of ongoing gifts, right? That sustainable source of revenue through maybe a membership type of program or some sort of subscription type of thing. Certainly, there are a lot of different platforms that will allow you to do this with smaller and mid-sized donors. And so this could be something, especially if it ties in nicely with what you're doing creatively, it could be an interesting way to allow folks to support and buy tickets and then also contribute on an ongoing basis in exchange for behind the scenes peaks or early access or, something else that doesn't cost a whole lot of money or time to provide. So if you haven't already taken a dive into your revenue and income sources and looked at kind of where they're coming from pie chart style, I'd really encourage you to do that this year and maybe set some targets for yourself. There are industry benchmarks, but really I would look at your own organization to see what makes sense. And then I would think about those what if scenarios from the dynamic budgeting session when it comes to diversifying your revenue, just to kind of stress test some of those key drivers of your income. And then I really like big open brainstorming sessions where everyone is encouraged to share bad fundraising and community building ideas, not because we do the bad ideas, but because expecting them sometimes allows the good ideas to percolate up to the surface. And then our last of the 7 things has to do with tax awareness. And this is a relatively simple statement. This basically says you have incorporated current individual tax law awareness into conversations with your individual donors in particular. Certainly that can connect to some legacy giving conversations, but what I really wanted to draw your attention to is a tax law change that is taking effect for 2026, so this calendar year. This legislation was approved last summer, but it only became effective in 2026, so this is brand new. And what this says is that individuals, even those who do not itemize their deductions, can still claim a $1,000 or up to $1,000 charitable deduction in addition to their standard deduction amount. So if you were around in fundraising during COVID, this is probably familiar to you. Remember, we allowed folks to take an additional $300 deduction, right? For even if they didn't itemize during COVID. This is that, except it's up to $1,000 now for individuals, $2,000 if you are married and filing joint with your spouse. But the gifts have to be cash gifts. So if you are donating goods, that is not going to apply. It has to be a money dollar gift to a qualified organization. That's probably you as a 501c3. And of course, just like all fundraising, the amount of the gift is reduced if they receive anything in exchange. But if you are an organization that is either starting out or maybe a legacy existing organization that's looking to maybe lean into some younger, emerging, smaller donors, or you have a very young, excited staff person who doesn't know why you're not using Kickstarter or Patreon to do additional fundraising, right? There could be something interesting here, particularly for smaller donors who might really appreciate the extra tax deduction and be giving at a more modest level. So, if it's relevant for you, maybe think about updating some of those fundraising strategies or conversations if that is something you want to take advantage of. I'm going to share my screen for the last time today and just let you visually see a recap of those 7 things, right? We talked about people and reporting and AI, dynamic budgeting, relevant policies, diversification, tax awareness. So I will end with gratitude and turn everything back over to Kathy to close us out for the day.
Thank you, everyone. And thank you, Elaine. Thank you so much. You are a wealth of information. Puns intended.